Hi there, welcome again to the Connect. We'd like to apologize for a bit of those technical problems that we were facing. So, once again, my name is Claire and I'll be your host for today. And we have our guest, Susan Wanjiku from Legacy Hub KE. And we're talking about money today. So, just before this break, Susan mentioned about some of the smart tools used in investing, such as money market funds and bonds. So, Susan, I think we won't have so much time, but could you just shortly touch on what money market funds are and bonds?
Okay. So they are ideally financial market investment opportunities, and the difference between of course, there's a very huge difference between money market funds and bonds. So let me start with MMFs. We call them MMFs, and then we can talk about the bonds. Now, a money market fund, when you think about a money market fund, I want you to think of them as an alternative to banks. Okay, so probably as you've been online, or if you listen to a lot of finance talk, we started by talking about inflation. And when you think about inflation, you realize that when you leave your money seated in a bank account uninvested, earning no money, you're losing money to inflation, right? So most people, when they hear that, they get a bit frustrated because they're like, okay, so what other options do I have? So money market funds are a good alternative to saving through banks because they will still preserve your money. So in other words, your money is as safe in a money market fund as it would be in a bank because of regulation to guarantee that the client's capital is preserved. However, you're getting more because now these savings are actually earning you interest. So, how they work in Kenya, you can literally open from anywhere in the world as long as you have a Kenyan ID. You have your KRA pin certificate and a passport photo, and you've already identified the company. So, some of the companies that have this money market funds are like CIC, Sanlam, Britam, Zimele, ICA, Lion. There are a number, there are a ton, Nabo Capital. Um, so you're able to actually now contact them and tell them, I'd like to open a money market fund, and they give you like an account opening form. So once you fill the form, you provide the necessary documents, they can actually open an account for you within 3 to 4 working days, and you're able to send, and also you're able to also withdraw within 2 to 4 working days. So it's a very good alternative to save because they give you around 9 to 10% interest per annum on your savings. And then there's also now the aspect of your money compounds over time. And compound interest is amazing when you start in your investment journey. So now that's like one of the short term to medium term. So if you want somewhere to just store money, you're like, I don't know what I want to do with it, but I'd like to store it somewhere where I know the value is not being eroded by inflation. A money market fund is a very good place to start as a beginner. Okay. And then now for my long term people, medium term to long term, you're like, okay, I have a couple of savings, I have this and the other going on, but I like somewhere where I can save or invest for the long term. Now, bonds are pretty much like what we call government debt security. And so you kind of like are loaning the government of Kenya money, and then they use that money to run the country, do some infrastructural projects, and throughout the life of the bond. So by the life of the bond, I mean, let's say you've invested in a 7 year bond. Throughout the 7 years, let's say I put a million shillings, that 1 million will be earning me interest, which is what we call passive income, every 6 months, right? So I've seen so many people use bonds for passive income. So some people get their interest, they're able to pay school fees, others get their interest. They may be able to pay an annual bill like car insurance, or maybe a medical insurance. So it's bonds are really good. They're more for long term, like you preserve your capital for a much longer duration of time. Your capital is still preserved, so you're not so worried about losing. What if the market behaves a certain type of way? As long as you go through like the Central Bank of Kenya and buy like what we call a fixed income bond, then you're guaranteed you'll be getting that fixed income every 6 months throughout the life of the bond. So they are a very good opportunity to preserve your capital but get also passive income. Other than paying things like school fees, I've also seen people use them for retirement planning as part of the retirement plan. Because maybe you come home with a lump sum and you're like, I would like to put this money somewhere where I won't, just spend all of it in a couple of months. So I've also seen people use that to, invest that lump sum, 20 million, 30 million, maybe you've accumulated throughout your entire work life. And that money that comes every 6 months can sustain you until the next payout. So they're amazing for passive income. If you think passive income, think bonds. Okay, they're amazing for that.
I love, I'm loving the topic of money, specifically when it comes to compounding interest and passive income
Yeah,
and the cost of living going up, but then you can still maintain that lifestyle. So you've
sure.
mentioned about money market funds and how you can get into it, but how difficult is it to get into government bonds?
Oh, wow. So up until last month, it was a bit difficult because then you would have to, so for most people, they would have to actually be here in Kenya to be able to go to the central bank, queue, get the form, open the account. And if you wouldn't be doing that, then you would have to actually send your papers via DHL to your bank once you fill them in. And then it was a bit of a long process. But guess what, guys? Now the government is actually rolling out an online portal where you can now access this investment opportunity online, just like the rest of them. It's as easy as a click of a button and just knowing what to do, where to go, and what you're looking for. So now I know the government is in process. So I do know that it's either active already or it's almost being launched. But within the next month or so, you should ideally be able to invest online from anywhere. Right. So the documents required are still the same. We call them the KYC documents, know your client. So obviously your ID, your KRA pin certificate, a passport photo, and you're good to go. And as long as you fill the form well, opening that account is very easy because it's just about your forms getting to the CBK or your application getting to the CBK. Once your account is open and active, then you can start buying your bonds or investing in your bonds, and you can buy as many bonds as you want as long as you have the money. And bonds will just keep paying you that passive income every 6 months.
Okay. I wish I knew
Yeah.
it was, I wish I knew that they are doing it online now because I had to walk into CBK, which wasn't bad, I have to say. And thanks to you, coach, because I
Remember.
didn't even know, I didn't even
Yeah.
know that you can get into bonds that easy. So thank you. Now,
Mm,
I have to ask, what about Saccos? Because everyone talks about Saccos and the advantages and this, but could you just
yeah.
lightly touch about the advantages, disadvantages, and if it's even related to investment?
Okay. SACCOs are an amazing savings avenue, especially here in Kenya. But there's a specific time that you should use SACCOs, okay? So, how SACCOs work is you save in that corporation, and then whenever you need a loan, they will give you a loan against your savings. And this is ideally how it works. They give you up to 3 times or up to 4 times your total savings. Now, so that means if I had a million saved up, then if I need a loan, they can give me up to 3 million or up to 4 million. Now, when do you use SACCOs? SACCOs are great if you know at some point in the near future you will need to do a capital intensive project, like a project that will take you so many years to save up to that X amount of money. And you're like, you know what? I think I would want to use a credit facility, get this project off the ground, whether that's a building project, rentals, maybe a business project. And then because you've already calculated your return on investment, you're sure that once this project is off, then you'll be able to use the proceeds or even your income to pay off this loan. So I always tell people, if you're not going to be taking advantage of the credit facilities, don't just use SACCOs as a pure savings option, because sometimes even the interest, some have very good interest rates, but most of them don't have a good interest rate. You would get a better interest rate, say, in a money market fund, but I do know quite a number that have good interest rates. However, if I'm putting money in a SACCO, and I'm not even taking the credit facilities. This money I'm giving the Sacco is being used to give Claire a loan, or Susan a loan, or Pete a loan. So it's almost like you're just giving the Sacco money to loan to other people for them to use that money to develop themselves, right? So you want to ensure that if you want pure savings, just go straight to your money market fund, get your interest, be done with it. So use a Sacco only when you know that at some point in the near future, like now I know at some point in my 30s, I would like to get started with a building project, like a real estate project, and it's quite capital intensive. So now I am actively like saving in a circle because I know at some point I'll come calling, I'll need the money. So they're very good, they're best utilized for credit facilities, but also some of them pay dividends. So a dividend is like you investing in a company, and then as that company grows and makes profits, they also share those profits with you once a year, once they've done their financials. So a couple of circles also have good dividends. So again, you use them for credit facilities, but if you also keep putting your deposits and buying shares in that particular circle, so then you're also able to profit as they profit as a company. So it's that those are some of the opportunities that are available in circles.
Okay. I didn't know that Saccos give dividends, but just maybe it's just me because I came here when I was really young, so I didn't have the opportunity of joining one. But tell
Mhm.
us, I've taken your investment, I think it's investment 101 class, which I found
Yeah.
absolutely amazing. I came in with an open
Yeah.
mind and there was so much I didn't know. So maybe explain to people why it's important to take some of these classes.
Okay, that's amazing. I mean, I remember the first conversation we had with you, and there was a lot of myths we needed to debunk, like how hard is it to invest in Kenya? I remember, I mean, you had fears about what if I lose my money, etc. And
Yeah.
maybe if you allow me to throw back the question to you, after our sessions, for example, did you still have that fear, uncertainty, and like you don't know what to do? Was that still the case?
Um, After we did our investment, first and foremost, I actually understood where to put my money into. The confidence went
Yeah.
up because you mentioned this thing called underlying assets, which I felt
Yeah.
it's really, really important to know where your money is going so you have more confidence in it. I also figured out I'm a low risk person. I think it's because I've
Yeah.
lost a lot of money over the years. So I
Mm,
can say it's
mm.
super important. There's a lot of information.
Sure, exactly. And that's why we do coaching, because
Yeah.
again, these things were not taught to us in school, but somehow you're expected to just get into adulthood, start earning money. No one told you what to do with that money or where to grow it, but all of a sudden you're expected to know just because you're an adult, right?
Yeah.
So the benefit of classes is we go all the way from looking at your budget, how much money you have at your disposal, and then now we curate an investment plan or an investment strategy that suits you. Because remember, we said no one shoe fits all.
Mm.
Depending on your age, how much money you're earning, the kind of goals you have, the kind of timeline you're working with, you're now able to actually make informed decisions so that you're not stretching yourself out too thin, okay, and trying to try this, drop this, do the other. You're able to move strategically because now you have information. So the best kind of investment, I always tell people, is to invest in financial literacy because it pays you the best return. You will know how to identify scam investments. You will know how
True.
to choose investments that work for you, right? So I mean, that's the best thing that could ever happen, because regardless of where you are, where you go, investing principles are the same,
Yeah.
right? So
And I
that's what we teach you.
yeah, and I do love the way you tailor it towards your own goals, which I found
Yeah.
really good because it's like there's something I can refer to and I keep going back into it. And you're right. Literacy, financial literacy is actually an investment. So I'm glad I did your
Yeah.
classes. So for those out there who are trying to know, who want to know, how can they access some of your classes and how can they enroll?
All right. So I do have a website that has all my services, my coaching packages and services listed. thelegacyhub.co.ke. That's my website. You can also reach me on YouTube here. I have a ton of videos addressing bonds, money market funds, budgeting, 5 different investments that you can make. I mean, we have such a load of information on our YouTube channel for free. You can also check out that particular platform. I'm also on Instagram, LinkedIn, and Facebook as Susan Wanjiku, YouTube Susan Wanjiku, and my company is the Legacy Hub Kenya. So if you just go to your Google and Google the Legacy Hub Kenya, you should ideally be able to see the products that we offer. Some of them are self-paced. You can take them at your own time if you're not actively available to attend coaching sessions. And we also have one-on-one coaching sessions that we organize as well. So that's where to get information on my services. The prices are on there. You don't have to DM for prices. So you will see all the packages there as well.
Yeah. Yeah, the one thing I did enjoy is the one-on-one class. That was fun.
Yes.
Now, allow
Mm.
us to just ask one question. So, one of our viewers has asked, what happens to people's money when the government defaults and is not able to pay people who've invested in T-bills?
Okay. Now, it is something that happens in a, I want you to think of that as a worst case scenario. Okay, like this here we are talking about a government collapsing. Civilization in that country has absolutely collapsed. So what will happen most times, like now in Kenya, we've been having an issue, and if you guys are following, you've seen there's people worrying whether the government will default on bonds and stuff like that. Now, this is how defaulting works. Like now, the thing that people are currently talking about, you will find that defaulting in a bond means that the people who were supposed to redeem their bonds, and by redeeming, I mean your 7 years are over, you invested 1 million, and now the 1 million needs to come back to you. Okay, now what will usually happen, depending on what's happening, sometimes it's just political environment, economic environment, they usually will just, defaulting doesn't necessarily mean it will absolutely not be paid. It ideally means that they may not be able to pay this year. So whoever's bonds, for instance, were supposed to mature this year, and let's say this is the year where we have some defaulting, then they would extend the maturity maybe by 2 years, 5 years, however long. But most times the bonds will be paid. So as long as Kenya is not going through political turmoil, collapse in government, it's unheard of that you've invested in a bond and that you will never get your money back. Most times, worst case scenario, you'll find that when you were supposed to actually be paid back your money, and that is the redemption, has been pushed, but you still will be able to get your coupons, etc. So it is, I'm not saying it's impossible, but it's highly unlikely as long as the country and the government is considered stable.
Okay. So thank you so much. I didn't actually. I was waiting to for someone to ask that question. Either way, I'd have asked you that question because I'm questioning
People are
about,
worried. People are
the
very
whole
worried,
government
and
not
that's
paying.
okay. Yeah, that's okay, and it's such a good worry. It means we are aware. It means we are
Yeah.
checking, and we are trying to understand how would this affect me. But I mean, if anyone is watching me right now and you have a bond and you've been worried, the best advice I can tell you right now is you don't want to liquidate at a loss, or don't sell your bonds at a loss when the prices are plummeting. The most underrated investment skill I have found is patience. If you have the patience to weather out some of these storms, don't be a panic investor and panic withdrawer. Sometimes the best decision you can make is wait it out, especially if you didn't make this investment without doing your due diligence, researching on the pros and cons. But not every shakeup is worth panicking and withdrawing all your money. Not all the time. So just
Yeah.
educate yourself on what first. Even figure out. Just go on Google and figure out how many countries have actually defaulted on bonds. Countable. Has Kenya ever defaulted on bonds? Just try read up on it and understand what defaulting would mean for you as an individual who's invested. So it's good to be aware of these things so that you also don't make very impulsive decisions, either buying or selling your bonds at the wrong time, or whichever other investment. So Stay educated.
No worries. Thank you so much for today, Susan. It's been quite informative. I also got to learn something new, which is great.
Yeah.
Um, so basically, to the viewers, you can reach out to Susan. We'd love to have you here again. Susan, welcome, and thank you so
I'd love
much
to
for
be
today.
back. We should definitely do this again.
Yes, there's a lot to cover. I think we need to talk about shares and,
Yeah.
other tools that we didn't get to cover today. But thank you so much.
Thank you for having me.
No worries. And thank you so much, viewers. Continue to support us, like, share, and see you next time. Bye.